If you think China is going to dethrone the USA as the world's largest economy, you would be incorrect. You may think you know a lot about China, but I bet you don't know as much as you think you do. Did you know that China has a much bigger debt problem than the US? Did you know that the entire system that led to the last 30 years of growth was basically a Ponzi scheme that's crumbling in front of us? If you didn't know these things, you don't know China as well as you thought you did. But by the end of this video, you'll know more than 99% of people out there. Today, I'll cover 7 key challenges China is facing: a massive debt burden, a property crisis, declining exports, a more hostile political environment, skyrocketing youth unemployment, deflation, and an aging population.
When the country appears to be experiencing deflation,
Beijing is taking a sledgehammer to its financial foundations.
China's economic recovery is facing a critical test as the nation awaits the release of its trade and inflation data this week.
Let's start with their debt problem, which is the source of many others that we'll talk about in this video. For years, people have predicted that China's debt will become a problem, and now it finally has. But not for the reason everyone thought. It's become a problem because they decided to do something about it before it became an even bigger problem. China's debt to GDP has jumped to about 300%, much higher than the US. And keep in mind, the US also pays less interest on its debt, and more of it is at the central government level, where they can literally print the global reserve currency. That can be a much bigger problem for other countries, especially when it's coming from unprofitable companies and local governments with broken business models, as we'll talk about more in a minute. Quick sidebar: I love how all the BRICS currency people say the dollar is based on nothing but debt, so the BRICS currency will take over. Yet, who has by far the largest economy in the BRICS? China. And China has a significantly bigger debt problem than the US. Okay, back to China's debt problems. For the last 30 years, the massive economic growth China achieved, often called the Chinese economic miracle, has been largely fueled by debt. People moved to cities and debt fueled decades of infrastructure like roads, trains, bridges. But there's no better poster child for this than the property market. China's property market makes up over 25% of its GDP. For reference, that's more than exports. Yet the property market has been declining massively for the past few years. I'll do a deeper video just on this, but the short version is that the Chinese property market was basically a Ponzi scheme. It only worked as long as prices kept rising. But now the party has come to an end. Think about it like this: a property developer always has to buy new land to replace the land that they've developed, right? And in China, there was usually at least a few years between when they bought the land and when they sold the apartment building or office complex or whatever they built on it. So pay close attention here. On a cash basis, they were selling properties at today's prices and buying new land at today's prices. But on an accounting basis, they were selling property at today's prices and booking the cost of that land at the prices from 5 years ago, or whenever they bought it. And land prices were always going up, so the prices from 5 years ago were always lower. That made it look like they were making a profit, but they were actually losing money. They would also sell projects when they were only partially complete. And since they were actually losing money on most of the projects, they needed the cash from pre-sale of new properties to finish the construction on the old properties. As long as they keep selling more and more new properties and land prices kept going up, the Ponzi scheme could keep going. However, high prices were causing other problems. Housing is way less affordable in China than it is in the US as a percentage of people's income. That's an issue because in China, people usually don't want to get married and have kids until they can buy a house. So since housing became so unaffordable, the birth rate declined. We'll talk more about the birth rate later, but one way the government tried to help housing become more affordable was through government policies designed to stop prices from going up so much. That's great, except that without rising prices, the business model is broken. Over 50 property developers have either defaulted on their debt or missed interest payments in the past 3 years. And the biggest one, Evergrande, just filed for bankruptcy. It's highly likely that they will not be the last. To make matters even worse, land sales make up about 40% of local government revenue. And local governments are responsible for most of the infrastructure spending, not to mention public services. I mean it when I say the entire model that fueled China's growth for the past few decades is broken. In past crises like 2008 and 2015, the government has stepped in with big property stimulus whenever the economy has been weak. Technically, they could do that again, but one of the major causes of this crisis is the government cracking down on the debt at the expense of the property developers. So allowing them to take on a lot more debt will be the exact opposite of what they're trying to accomplish. Unfortunately, there's no easy fix this time. That brings us to the next major challenge that the Chinese economy is facing: declining exports. After property, exports are the next biggest portion of their economy. However, these are also declining significantly for 2 reasons. First, their main exports are goods rather than services. However, after lockdowns ended around most of the world, people already had all the goods they needed. No one wanted to buy computers and blankets anymore. They wanted to go out and have the experiences they'd been missing out on. They wanted to go to the movies, see live sports, eat at restaurants, but China doesn't really benefit from that kind of spending outside of China. They might have benefited from increased travel, but their travel restrictions were so strong that they mostly shut that off. The second reason their exports are down so much is that companies and governments around the world are trying to diversify their supply chains away from China. Production is moving to Vietnam, Mexico, and many other places, which could place downward pressure on Chinese exports for years. And that brings us to the next major challenge that China faces: geopolitics. I think that Western support has been an underappreciated tailwind boosting Chinese growth over the past few decades, and the increasing tensions are going to flip that from a tailwind to a headwind. For years, their growth was boosted by Western companies sharing technology with them, or in some cases, them stealing it. Western businesses have seen the big growth opportunity in a China that was reforming and opening up, and lobbied politicians for China-friendly policies. That is definitely not the case anymore. Tough on China is basically the one thing that the Republicans and Democrats can agree on these days, and there's a pretty similar sentiment throughout most of the world. Let's not forget, even India banned pretty much all of the major Chinese apps in 2020. Rising skepticism toward China, falling investment, increasing restrictions, and diversifying supply chain are all going to negatively impact China's growth going forward. Then again, their own policies are also hampering their growth. In 2021, they began cracking down on big tech companies that they felt were too profitable in a push called Common Prosperity. Essentially, it was designed to reduce income inequality.
要实现共同富裕，但不是搞平均主义，而是要先把蛋糕做大，然后通过合理的制度安排，把蛋糕分好，水涨船高，各得其所，让发展成果更多、更公平惠及全体。
However, those tech companies were also a big source of the country's growth and of the high-paying white-collar jobs that China's highly educated youth clamors for. Their youth unemployment rate just climbed to over 21%. It's so high that the government just said they were going to stop reporting it from now on, which to me is a sign that they don't see it improving anytime soon. Even Chinese companies are now focused on expanding outside of China to stay out of the crosshairs of the regulators. Ever heard of Temu? They were literally only founded last year, and now they're everywhere in the US and Europe because their Chinese parent company, Pinduoduo, has been aggressively expanding outside of China. The crackdowns on real estate, tech, education, and many other industries are having a significant impact on the economy. And one of the ways this is showing up is in deflation. In July, China's economy slipped into deflation. This is a major problem because when an economy is in deflation, meaning prices are falling, why invest? Everything is going to be cheaper later, right? It incentivizes people and businesses to hoard cash and basically grinds the economy to a halt. Some of these self-sabotaging policies can be turned around, like the anti-business environment, but others are much harder to fix, like the issues with the broken property market and ballooning debt. Deflation plagued Japan for the past 25 years, and now China is at risk of following in their footsteps because of one key challenge: their aging population. To illustrate this, you can see how from 1990 to 2020, the percentage of Japan's population over age 65 more than doubled from about 13% to 30%, while the US population stayed about the same. That's the main reason their economy stagnated while the US economy continued to grow. Over the next 30 years, China's population is projected to mirror the last 30 years in Japan. Almost exactly. Japan went from 13 to 30%, and China is projected to go from 13 to 32% of its population over the age of 65. With a declining birth rate, immigration is the only way to get more young workers into the country. But China's immigration policies are actually even more strict than Japan's. The aging population was a major reason for Japan's stagnation over the past 30 years, and no one saw that coming. Japan was the tech leader of the world in the late 80s. The Japanese stock market was worth more than the US stock market, but yet an aging population and business-harming policies brought them down. Now, China is facing many of the same risks, but with an increasingly authoritarian leader for life at the helm. It's not too late to right the ship, but some of their problems are really difficult to get out of. I don't think the Chinese economy will stagnate forever by any means, but I am skeptical that they will ever catch up to the US. I think the days of rapid world-leading Chinese growth are over, and that will have broad investment implications across the rest of the world for the rest of our lives. Check out the link below for my free investment training. Thanks for watching.